What does investments even mean? In simple economic terms, it means to be borrowing in order to purchase physical capital. Now, if the topic is stocks and bonds, then it simply means savers, people that save. Savers engage in the financial investment, which provides the funds for borrowers to engage in capital investments. It's basically a wheel that keeps going. It's like depositing your money in the bank. They take it, they invest it, and then whatever profits they make, some of it goes back to their clients if they have savings accounts or other accounts that increase based on any interest rates that they have going at the time. So that's how they return the value back. And initially, they're the bigger saver because they're taking it and putting in capital markets, whether it's ETFs or individual companies. Here are 3 investment keys. Know your investing goals and timeline. A person that's investing to buy a house has a different timeline from somebody that's investing for retirement, and somebody who is just trading on a daily basis to profit on a day-to-day basis. Their whole strategy is different. So figuring out the timeline is extremely important, and knowing how that timeline expands over time based on inflation. Another investing key is to always max out any accounts that your job offers for retirement. So if your 401k has a match it to the max. And then you should always open up a Roth IRA account, even if your job doesn't offer it, so you can max that out annually. Because when you're ready to pull that money out later in retirement, you don't get taxed. And that's how you should kind of figure out what accounts you should have open and how you're investing in each account. The final key for investing is if you're self-employed, then you can look for accounts that are private retirement accounts, specifically that are tax-free or tax-efficient or advantage accounts. So these accounts work based on your lifestyle. Since you're an entrepreneur, you might be paying taxes in a different format. And essentially, the steps you take on doing that is, once again, open a Roth IRA, finding other accounts based on your timeline and how much your income is and what your lifestyle is. And it all is going to differ, especially if you're an entrepreneur like myself. The way I save is completely different from my cousin who has a job. It's very structured for them. It goes out of their check automatically. Where for me, I have to decide on a monthly basis how much I'm going to allocate and what the trajectory of the markets are. I'm also an investor trader who's active. So my whole style of investing is different. I have 2 different accounts. One is for long-term investing and one is for swing trading. So it's a different lifestyle, but you can learn about all those things, and anybody can engage in this, even if they're not an active investor. Here are 3 investing experts and leaders you must get to know: Ken Griffin, Dan Niles, David Rubenstein. These guys are legends in the game, from hedge funds to private market investing to owning baseball teams. They've done it all. Their resume is insane. David Rubenstein's written some great books. How to Invest is one of those. Basically what he's done is he's taken all these incredible entrepreneurs, investors, business people that are on the top level of the game, and he runs through all their different styles of investing and their backgrounds, their history. So it goes through the in-depth understanding of each person's journey and how they evolved through that journey and where they are at that current point. And then he asks some cool questions about their personalities and how these people actually are. Or go online, go check out all his interviews. He's got them stacked. And here are 2 quotes from David Rubenstein that are amazing. You can only do 3 things with your money. You can spend it, you can invest it, or you can give it away. That shows his charitable contributions that he loves to make over time. He's widespread in his knowledge, so he understands various types of businesses, not just investing. He's also speaks to some of the best investors and business leaders in the world. That's his other talent. He's actually a really well-known journalist. Not only does he do interviews, he does big conventions where he speaks to these guys in front of thousands of people. So his speaking ability is amazing that you can learn from also. His other quote that I love is, "Defying conventional wisdom makes great investors." You have to go against the grain. So this can be looked at just beyond investing. When it comes to business, is doing things that everybody isn't doing. It's being a pioneer, a leader, going ahead of the curve. Now for an investor, it could also mean you're doing things that everybody else isn't doing, even though they're making money. That's what's unique about this statement, is that even though he's not talking about success or winning, he's just talking about thinking very uniquely, thinking against the grain. You don't always have to be on the same chapter as everybody. As long as you're thinking, just keep pushing through and the ideas will come. Let's talk about stocks from March 30th to April 2nd, 2026. The whole week was marked by high volatility, with the U.S. administration saying one thing and the Iranian administration saying something. The other issue was the Federal Reserve expectations of rates being cut. And then the other issue is the service sector seeing some issues with its profitability, growth, and jobs. All this combined has been a brutal run in early March that saw the Dow and the Nasdaq slip to correction territory, marked by fragile recovery midweek, and then the Iranian leadership coming out and saying they are willing to negotiate, and then Trump saying the war might end within 2 to 3 weeks. The market liked that. It gave it a pop up, but then it kind of settled out. Nothing crazy. So we'll see how this week goes, because the volatility is extremely high, because we don't know if another bomb will go off in a refinery or another tanker will be down. All that information is going to keep it very volatile. And once again, oil prices are on a risk meter that have been around in a long time. Overall, oil, transportation, sector changes, and the Fed's reaction to all of this is not, reducing any risk for anybody. Now, as far as jobs go, the unemployment rate unexpectedly tickled down a little bit. Jobs are risky, but the best thing we can say right now is that the distribution of employment growth has widened a little bit. We'll see how long that lasts. You saw growth in manufacturing and construction increase. Now, this I would still be a little skeptical, because essentially a lot of this construction growth is related to enterprises and the government. It's not too much growth that we're seeing with housing development or single family home development and that type of stuff. Basically, we have a nominal economy that's barely growing at a 4% rate, and that's what jobs numbers are now being backed by realistically. With additional inflation pressure on the horizon from higher energy costs and transportation costs, the Fed will be looking hawkish. So this is a cumulative of the war, interest rates, and jobs, and then the trajectory of even season changing, which will give jobs a little boost. We also have to look at the immigration system. With ICE kicking all these people out, these job numbers will vary based on that data also. At the current time, inflation expectations don't seem to be ever reaching the goal of 2%. We keep just floating above it, and with how much the Trump presidency keeps spending, it doesn't seem like we're ever going to get close to it. The breakout in nominal rates was not about inflation expectations also, or concerned anything with inflation or any of the macro reasons, whether it's debt and Fed credibility, Trump being aggressive with, institutions, the dollar value coming down. It simply is because of business growth and GDP growth, or you can say the lack thereof. We're stalling in a way where it seems like the further we go, we're losing control of the economy in a way where there's just too much going on. There's no real facts. There's no real information. We're only waiting for one tweet to come out. Where these guys are making a lot of money in the back end, whether it's congressmen, senators, their lobbyists. We see all these crazy numbers whenever the stock market shifts. You see these purchases being made 15 minutes before, stocks being sold 15 minutes before. Basically, it's only people that have the information are Trump's cabinet, and they're making the plays, which at the end does affect us. China even came out, and Iran even came out, that U.S. manipulates the market with this strategy. They're not really trying to negotiate. They're trying to stall things and make more money. We already know there is no wage growth, but what the average hourly earnings are doing with limited growth, they probably will translate into a significant contraction, real income growth. The retail gasoline prices are still climbing, and if you look at wholesale gasoline futures, there's going to be some additional upward pressure in retail gas. With utilities rising and other pains within the grocery stores. I just got a box of tomatoes from our restaurant. It cost $75 for one box that usually costs around $20. So we're feeling it right away. Inflation will only go up if the war keeps going on. Does Trump really want this? Because if he really wants this, then guess what's going to happen? Powell is going to be the one who's going to be making decisions on the interest rates. And that's before his guy gets in to the feds. Does he really want to look like the cool guy who lowers the rates, his guy lowered the rates, or his arch nemesis at the feds who lowered the rates to kind of fix issues due to his war? That's how I think psychologically Trump is thinking right now, because stock market's not pretty, growth isn't pretty, expenditures into the war isn't pretty. Only thing left for him to look cool and good before the midterms is try to get his guy in as quickly as possible, and he's the one who lowers the rates, not Powell. Now, what was surprising was Powell actually spoke on March 30th in Harvard University, and he seemed really dovish. And that threw some people off, but at the same time, that's kind of been his personality. He likes to get as much as data as possible before he says anything outlandish, and he doesn't try to tweak the markets too much. So overall, his behavior is consistent, and his focus seems to be in ending his term with the least amount of issues he can face. And then finally, we have Emmanuel Macron, the president of France, publicly speaking to middle-sized countries and saying that they need to come together and ignore the US and China and go away from their hegemony. His concern is that these two powers are too focused on themselves and their own growth and just sucking out the wealth from other nations. He believes to protect themselves and to keep growing financially, economically, they need to focus on themselves and do trade and businesses within themselves as much as possible. He's calling out all the middle-sized countries and basically you can say emerging markets that, hey, we need to work together where these two powers are always going to be tearing us down or causing us issues.